Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, January the 16th. And I've got the S&P up on the screen. You guys know I like to start at the S&P, and that kind of tells us where everything is going. I mean, we could look at the NASDAQ or the RUT. It's going to be the same, basically the same thing, but I kind of want to pick up where I left off last week. If you did see the video last week, last Wednesday, you know, I was looking for continued strength, and we've been getting it, but we've kind of been getting the slow grind. And let me show you here. If you did not see that video, we'll take a look at it. So let me expand out here 10 days, and this, as we know, is the, you know, that was the that low back there that was pretty painful. Since then, we've had this, nice trajectory. Now we are starting. We got into a kind of a grind here where we're not making a lot of progress, but we are going higher. And if you look at this, this is simply a pause in the continuation higher, and there is honestly nothing bearish about this at all. And we've been going back and forth talking about, and I say we, the traders here, kind of going back and forth about, bullish or bearish. Everybody seems to be very bearish, and I am too, but I said in last week's video, I don't want to, even though I'm bearish, this thing's going to go higher, and I'm going to let it go higher before I do any shorting. And the levels that I was looking at, and still looking at from last Wednesday, was this snow line here. We got 2608 snow line, and I think it's a fib level at 2610, I believe. And then there's a fire line up here at 2650, and we hit the skyline yesterday, got through it, and pretty easily actually, and then opened up higher, and we hit a new I guess intermediate term high for us for the last couple of weeks here at 2625. Now that's another line in the sand, but a hurdle, not a line in the sand, hurdle. So let's go out here and look at this, and I will show you. I've got my Voodoo Lines up here, so let's take a look. And again, from last week, I was, we were here somewhere, and again, I think this is not over. This looks pretty, there was a lot of damage here. This was the worst December since what, 1931 or something like that. And it's going to turn out to be, if this continues, we'll probably have the best January in, 30 years or whatever, because it's straight down, straight up. And then, that, I guess, begs the question, is this the V-shaped recovery? And I don't think so. What I do think is that we will come up here. We've already taken, I was saying that's that skyline 2608. I think we come up and tag this 2650 level, and then we come back. And I think we come back to this level, this snow line here, or excuse me, snow line there is at 2540. I think we come back to that area, and then probably bounce from there, and maybe on this next time we get up here. Now that is that's what I would like to see happen. That's a very likely scenario. Let's get some consolidation, backfill, market catch its breath, and then make the next run higher. But what do we have to think about in addition to that? I mean, we can look at charts all day, but we know the Fed can say, one way or the other, and kind of blow the whole, blow the chart out of the water. It won't matter, right? So we have a Fed meeting coming up in 2 weeks from today, on January the 30th, and we've got Powell that needs to really walk the walk from everything he's been saying, and that will come through in the Fed minutes, of course, if he doesn't change his tune a little bit and continue to be a little dovish. Now I think Powell got I think he probably got a little flack. Is that the right way to say it about this Powell-induced trillion-dollar loss there? When he was, trying to be defiant with Trump and all that kind of stuff. Anyway, that's my take on it, but now I think they being the Fed, they don't want this thing to roll over and die, because it'll be on their hands and all that kind of stuff. So I think the Fed meeting is going to be fine. I think they will continue to at least have a dovish overtone and that type of thing. Obviously, we'll be watching it. Again, it's 2 weeks from today. But it would be normal for us to pull back here, consolidate before coming back up higher. Now, if we get back down here, and there are other troubles in the water, in addition to the Fed, we've got China, we've got Brexit. The biggest thing out there we've got, coming down the hill at us is earnings. And earnings are going to be this quarter. I think we're going to see some pretty decent slowing down the multinationals with they're going to blame it on tariffs, and probably rightly so. Costs are going up, and that reason we're going to guide lower. Not going to be good. We're going to have an overall increase, I think, in earnings, looking at around 10.4%, something like that. But we're probably going to see a lot of guidance that's going to be cut, and that could, put some shockwaves through the market. So that being said, we could break some of these levels and come back down here. If that's the case and all of the wrong things happen, like the Fed is hawkish and China says we're out of here, we're not talking anymore, across the board S&P, companies are guiding lower and all that kind of stuff, look out below, we're going to be back down here. And again, I don't know if that's the case. If everything's great, China says, yeah, we're willing to deal, and the Fed's hawkish and earnings are great, we're going this way. But we won't go in a straight line either way. So I'm looking to have some back and forth action, in the short term, probably between these levels, and in the longer term, between these levels. So that gives us, we've got to have a game plan, and you have to anticipate things coming up, and what might happen and what might not happen, and so forth. And that's what I'm looking at right now. For the next week, Monday's a holiday, so if you got trades on that are catching theta, try to let them run. At least don't close them out this week if you can avoid it. Let them run. We'll catch some free theta on Monday, and until the Fed meets, we just got earnings, just earnings, and keep an eye on that, who's reporting and so forth. So I hope that helps, gives you a little insight. That's what I'm thinking. And I'll be back with you guys on 1 week from today, and we'll look at it and see what has happened. So, in my time on this, I think we get up here. I honestly think we got a shot of getting at 2650 by Friday. That's a stretch, but it's within shot here. It's within reach by Friday. So, and Friday's option expiration. So that's kind of what I'm looking for. So anyway, hope this helps, makes sense. And good trading, and I will see you guys next week. Thanks a lot.